Oh, what's up, everybody? Good evening. So, my favorite strategy is coming up here. ONT is doing the exact same thing as all fifth wave extensions. Not extension, but a fifth wave rally, creating a very demarcated trend line that I think is going to be very reasonable to short there very soon because all five waves are in. I think that this is going to be a really easy wave to short. I am hunting for the bearishly diverging signs that's giving me signals that it's now nearing a top. We are also reaching a very close to resistance zone that's dating all the way back to June and August. So the big question is, how is it possible to even break above there? And the answer is, it's probably not that likely. Therefore, I will start laddering my buys. I say ladder my buys, I'm referring to my short position that I'll be taking. So right now I got quite a bit online. I got $126,000 here, but I'm gonna only play I'm gonna leverage it, so I can leverage quite a significant amount. So the best thing that I should do is limit exactly how much I play to make sure that I dollar cost average accordingly. So I'm gonna go for about 128 here and try to get some more filled. If it goes up a little bit more, then it's gonna be the perfect trade that I'll take. So we know that this is the fifth wave that's definitely forming. If I remove that white trend line, you see that it's the five waves getting into that region. So if it even bounced up to the top region, it would be another 6%. So 6% on 100,000, $6,000 down. I don't want to do that. So I'm gonna only go in for 50% of my position. So this was at 328. I'm gonna go in for 50% of my position and then save the rest for a little bit later. So what you're gonna see is me laddering now with 100,000, which is $30,000 at a time. So you can see it's spiking up a little bit. You can see that, right? That little thing there. So now we're gonna go into a lower time frame and just see if we can actually. So this looks like it's a third wave, to be quite honest. The 4 looks like it's right here. This is what it looks like. This looks like it's now a 1, and these characteristics are always of a third wave. Like this characteristic where it goes 1, 2, 3, 4, 5, and the 4 comes down. Maybe there's a small 5. So I think I'm in a really good position right now. The 5 is bearishly diverging. You can see it's starting to cross down. You're seeing this support region right here, right there. See that on the RSI? So what it comes down to is having a good eye, attention for detail. You have to hunt. It's literally an Easter egg hunt. You have to keep constantly looking for signs that can give it away that it's going to be dropping to the downside, especially when you're near a top. You have to look for signs where it's going to give you a hint that, hey, maybe we're actually close to the top now. And if you can find a lot of these hints, then you can do something called shorting, which is betting against the market that it'll go down. So for example, let's just pretend that this coin, I'm trying to bet against the market, which means I'm betting that it's actually going to drop down. Does that make sense? You can bet that it's going to go up, or you can bet that it's going to go down. So when you bet that it's going to go down, what you're essentially doing is this. Let's just pretend that one stock was $1,000. So what you're going to do is you're going to borrow one stock right now, and let's just say the price was $100. If the price was $100 and you wanted to bet that the stock will go down, what you'll do is you'll say to the place that you trade, called the broker or the exchange, you'll say to them, hey, let me borrow one right now for $100 and I'll pay you one back. So what you do is this. You end up borrowing one from them and then you sell it for $100. And then what happens after that is if the price drops to, for example, $90, you buy one back. So after you bought it from the exchange, you sell it. So if that wasn't clear, after you borrow one from the exchange at $100, you sell it. So you sold it for $100. Now the exchange only wants back that one stock that you borrowed from them. So let's say that the price drops down to $90 and then you buy it back for $90. Well, your original one that you sold for $100, you made $100 from it, but then you bought one back at $90. And then if you give it back to the exchange at a price of $90 that you bought it at, that means there's a difference of $10. Does that make sense? So you're actually profiting $10. But let's say it's the opposite, where the price goes up. So what happens is, if you buy it when it goes up to say $110, but you originally bought it back for $10, then you're overpaying for it. You're paying $10 more, which means when you buy that one stock back for 110, but you originally bought it for 100, you're paying a difference of $10 more. So when you pay $10 more, that's 10% more, which means you just lost 10%. So when I'm betting on the market going down, I'm trying to do something called short. And when you short it, you're buying at the high position at the top. So for example, at this price, if I sold one for 32 cents that it's at right now, and then if I were to buy one back a little bit lower, then I'm paying back the exchange, and then I would be making a profit on the difference. So for example, if I'm playing $100,000 and I buy one now at 32 and it drops to 6% less, well, I'm saving myself now 6% to buy back from other people, and then I pay back the exchange or broker. That's the place that I trade. So I'm making 6% back. So if I short for $100,000, but I buy back for 6% less, that's 94,000. Buy it originally for 100,000, but I buy back altogether at 94,000, and I give them back what I owe them, then I'm making a profit of 6%, right? So I'm making $6,000 back. That's how the logic works, okay? So that's the idea of shorting, and that's actually what I specialize in. I specialize in shorting because I understand the fear and the mechanics behind the FOMO and reaching a top. So everybody in the market mostly decides to make money when it goes up from the bottom going to the top. And I'm very, very, very fucking good at that. But I think that any monkey could make money going up, because you just have to buy and hold and figure out when there's a good market sentiment to go up. But what I decided to specialize in is when the market's reaching a top and going down. I decided to specialize in how to catch a top because every Joe Blow's trying to go long. And I want to bet against the market. I want to be the odd grain out. Those who roll against the grain, usually not a good thing. In Japan, what they say is the hammer that sticks up will get nailed down, which is referring to the people that are not conforming to society and to what the odds are predicting. Whereas myself, I will bet against the market. We are at a very high point, so I'm going to anticipate a drop. That is why I'm going to keep positioning myself very, very well. I'm going to keep going right now. I'm going to market execute a little bit more. Let's see if I can keep filling up my positions. I'm going to go 100,000 more. So now I'm in a really good position of about, hold on, fuck, I'm not in a market execute. I'm gonna short right now and make a little bit of a wall just to test the market and see how they're actually looking to react. Let's see if any of these are actually gonna fill, and they did fill. So now I'm in a position for 300,000 times 0.32. You can do the math really easily, I'm sure. It's about $96,000. Let me confirm. Yep, about $96,000. So now I've got a reserve of about $42,000 left to play. And I plan to do very, very well on this. But before I enter, I'm going to have a reserve there. I'm going to see how the market's trending. And I'm going to see... What was that? That was a weird glitch. Not the volume. I don't give a fuck about the volume most days, as long as it meets my minimum criteria. I think this will be fine. So I'm okay to enter. I'm in the market execute another 100,000. So now I am in a trade for $128,000. Let's double check. I changed it to USDT. $120,000. You got to be able to do very quick math. If you can't do quick math, what the fuck are you doing trading? Yo guys, what's up? Okay, so Lena clearly did that, right? You'd agree with me that Lena did that. 5 waves. Yup. If you argue with me, you're wrong. I'm right. ONT. I know it's really hard to see, guys. I know you may not also want to see it. But do you see the structure that we're working with? Would you agree with me that this is the structure that we're working with? where it's moved up about 37%, right? 37%. Okay, so now we have to break it up further. We have to break it up an extreme amount. And it's hard, but I'm gonna guide you through it. So you look for the first wave that has a correction first. Well, actually, the best way to do it is you look for subdivisions. Okay, just bear with me. You will understand this. The way that you divide up Elliott wave theory is you look for subdivisions first. You say to yourself, fuck. Okay, well, that looks like a 1. That looks like a 2, 3, 4, and 5. That 5 is really divisible. If you go to a really low time frame, check out what you see. Okay, look at this, right? Doesn't that look like 5 clean waves in the 5? Isn't it funny how, like, when you break things down like that, you can see it so much more clear. This is on 1 minute chart, right? So if you go to 1 minute chart, you see a lot. But what happens if you see in the 30-minute chart? The 30-minute chart looks like, right? Okay, so you know that that's a subwave. You would all agree with me now. It's a subwave. So that's a 1, right? So then you would say to yourself, well, what the fuck is the rest? Well, that's got to be a 3 up there. That's going to be a 4. And then you can divide up this one here as well. 1, 2, it made a diagonal. 3, it overlaps. 4, and a double top for the 5. So if you're able to divide up basically 2 waves that are divisible into 5s, therefore, that wave must be a 1, 2, 3, 4, and a 5. So that means that there's either a wave before it or after it. So if that's 5 waves there and it makes up a whole subwave, then maybe the 1 before it, you would just assume it's 1. Does that logic make sense? And we just counted the rest. That means that that's got to be a 4 and that's got to be a 5 somewhere right now. Does that make sense? So if that's got to be a 5 somewhere, what if this was a 1, a 2, a 3, and this made a 1, 2, 3, 4, oh sorry, 1, I'm just going to fucking draw it out, and I'll zoom in further so you guys can understand. Right? So now we got the 3, this one I'm moving. 3, got the 4 down here. And what if here now we got the 1, 2, 3, 4, 5. 1, 2, 3, 4. Maybe that's a 5, a diagonal. Maybe that's a 5. I don't fucking know. But is it possible that it's a top right now? Yes, it is. So then you zoom even further out. See that green box at the top? What you see is demarcate the zone. Demarcate. I know a lot of people are not English speakers, but demarcate means to identify the zone that you're trading in and find the resistance. Like isolate the zone. Look at the zone. We're kind of there right now. Take a look again. You need to really look at that green zone. That's where we are at right now. Okay, like all of this aside, the Elliott wave theory, that's where we're kind of at right now. So we're getting fucking close. Using Lena as a reference, you know, every wave is getting to a 5th wave very soon. So pay attention to this. Now you need to ask yourself, where am I going to enter? And I'm going to let you figure that out. Oh, what's up, guys? So I'm in a short position right now for this coin called ONT, and we'll talk about why I'm in it. So I'm only keeping a balance of a little bit over $100,000 on this account right now, and I am in a short position. And I'm up about $2,000 already right now. That's why I'm leveraged. I'm leveraged because everything is in USDT on my ledger and also in a huge, gigantic portfolio, and also in my earn because I'm getting interest of like $20, $30 a day. $1,000 a month in interest pays for everything for me for the month living in Turkey. So I'm in a good short position right now. And the reason I'm in it is because, just to remind everybody in case y'all forgot, is because we see a 5 Elliott wave pattern, and 5 Elliott wave patterns are my absolute motherfucking best friend. And we see it here. It is so clear to me. I don't know how the fuck it's not clear to other people. I have no idea how it's not clear. Check this out, guys. You know, the 5th waves are like dudes that just can't get it up. See what I mean? So this is Lena. Lena barely makes a wave up there. But if you actually zoom in really close, the fifth subwave, it actually doesn't even form. Look, it literally doesn't even form. So if you look at it, the fifth wave goes like this on Lita. One somewhere in there, two's there, three, four, and then the five barely forms. And then if you look on Lena right now, or sorry, not Lena, Alt, ONT, whatever the fuck this coin is, it's also got some issues. Look. See the fifth wave? It's double topped. 100% this is the fucking top, guys. 100%. Like 100%. Okay? I'm only keeping a little bit over $100,000 in my account. Everything is in USDT on the ledger, or in earn here, or staking on my ledger. So I don't really keep much online right now, but I don't need a lot. Do you guys see my futures account right there? 13,900. I grew that from, what the fuck was it? From, I think, $8,000 this month to 14. I think I'm up $6,000 in 4 days. And guess what, motherfuckers? I'm up. Yo, what's up, everybody? So it's about 10:30 tonight, and I wrote to my Discord group 1 hour ago, it's coming. What am I implying? Comment now to share what you've learned. And then I released a really detailed 5-minute video titled Holy Shit, Detailed Elliott Wave Theory on ONT. And what I was basically telling the group was this, that there's a 5 fractal wave pattern that I identified very clearly for the group right here. 1, 2, 3, 4, 5. And it was a massive pattern. This is what I specialize in. Everybody loves to long in the market, and they decide to make profit going to the upside. But what I decided to do was to focus on specializing on, hold on, let me take my $2,600 profit. Bam. What I decided to do, did you guys just see that? Let me show you right here. There you go. That was a $2,500 profit that I just... That was the only trade that I took this evening, 2,500, and then I took another trade earlier for 2,600. So today I'm up about 5,000 American dollars, which is a substantial amount because that's like 7,000 Canadian dollars a month, which is what people like usually take 2 months to make in Canada at a normal job. So let me explain to you my strategy. So it's all about psychology. I don't really focus on the strategy much for trading. To me, it's all about the psychology. Okay. So the psychology of trading is about thinking. It's about thinking, and it's about the discipline of trading and trying to recognize patterns and behaviors in the market. Now, the whole market, it's not about, like, day trading is not about how intelligent you are. If it was about intelligence, every motherfucking lawyer, every fucking doctor, every fucking engineer like myself would all be doing it, and we would all be profitable, and we would all make a lot of money. But when you really think about what makes a successful trader, yeah, sure, everybody can develop a strategy, but it's not as clear as reading a piece of paper like a fucking Bible and then sticking to it and then adhering to the rules of this Bible. It's not about that. It's about how fucking disciplined are you to read these set of instructions and actually adhere to them, and do not disrespect and do not disobey and do not waver from these motherfucking rules. You have a set of rules that you must abide by every fucking day. And that is what separates a difference between a $1 million trader and a really unsuccessful one that just wastes money, and they're in for like just a few short hours or days or weeks or months. They lose everything and then they're fucking gone. So how do you stay in the game and you make money like this? Let me tell you guys. First of all, it has a lot to do with independent thinking. You need to have a skill set that's going to allow you to think for yourself and not rely on other people. You need to be self-sufficient. You need to be dependent on yourself. You need to be a confident trader, and you develop that confidence by adhering to the set of rules that you set forth for yourself, and you don't waver from them. So for example, one set of rule, if you're new and you're starting out, would be saying to yourself, I will only trade $200 for the next 30 days, and I will never leverage once, and I will always stop myself out after being down 2%. And then the next month, you can say to yourself, I'll do the same with only $1,000. So you're 2 months in. Then the next month, you'll say to yourself, I'll only trade with $5,000 now. So you develop an actual trading plan that you stick with. And then after that, you go even further. So it's not just about the trading strategy, it's about the discipline that you set forth to yourself. Because the majority of people will lose everything that they put into the market because a motherfucking shark like me is gonna come in and we're gonna outtrade you. The whole market is a competitive nature. It's the most competitive field in the fucking world and the most alluring as well. So you must be able to differentiate yourself from the guy on the left and the guy on the right. So you got to really think about how these guy motherfuckers will be thinking and how newer people are going to be treating the game. And newer people are going to come into the market and they're going to want to make as much money as possible. So they're going to play as much as possible to make the maximum amount. And they're going to take on even more risk. But the trader that actually minimizes their risk and focuses on their progression and focuses on their discipline and focuses on their strategy is going to be much more well equipped down the road and has a higher success rate in the future as well. So when I first started out trading, I definitely made a lot of mistakes, and this is why I'm able to share with you guys this strategy now. I went from a basically trading with $500 at a time to trading like literally like 1.4 fucking million Canadian, no, American dollars, the biggest size. Actually, biggest size is 1.5 million, which is like 2 million Canadian dollars. Like, what the fuck? You go from $2,000, like my bankroll was $2,000, like total net worth, to 8 years later to like multi-million dollars. How do you get there? You got to get there by really being disciplined, and you got to really start trusting yourself and critiquing yourself and documenting everything that you go through. First of all, I want to tell you guys about my background. I did fucking horribly in high school. I dropped out. I didn't graduate high school till I was 23 years old. Went to university in math and barely got by. I fucking did the worst performance at every single job I ever worked at. I was showed up late. I got fired from pretty much every engineering job that I was ever at. And now I make about 30 to 50 times more than fucking any engineer that you will probably ever make in your life or meet in your life. So the reason why I'm so successful now is because I roll against the grain. Does that make sense to you? In English, we say roll against the grain. You don't want to do that, right? You got to conform to what society wants you to do. You got to go to school. You got to get that student loan. You got to fucking go into that field and specialize and blah, 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 blah. Go through the whole academic system. And that's all what we're taught to do. You got to do what our parents want us to do as a fucking immigrant, which is, hey, they came here for us. We're gonna work our asses off for 16-hour days, 7 days a week, just so you can have a life. We left our home country. We're doing it for fucking you. You gotta go to university. You gotta get a student loan. you gotta study for 4 to 5 years. You'll do that basic shit. And in Japan, they say that the nail that sticks up gets hammered down. But in North American culture, we say don't roll against the grain, right? Similar sayings. So what I decided to do was to roll against the grain, right? So I rolled against the grain, and instead of always longing to make profit on the way going up, I decided to roll against the grain and make profit on the way going down. So I specialized in dissecting and researching about the market conditions where it's showing me where the top is. And because of that, I bet against the market, so it dropped. So what's up, guys? That was a really good question that you asked. What leverage am I using? So the truth is, like, if you have the money that's liquid in your account, it's fine to leverage. Do you know what I mean? Like, I'm only going to keep, for example, in my futures account here, $16,200. That's all I'm keeping. And then sometimes I have more, sometimes I have less. It depends on the earn and when things expire. Like in my earn, I'm making, well, sometimes I'm making $20 a day, sometimes I'm making $30 a day. I just started to stake, and I'm also staking in my ledger as well. So I'm literally earning like between $300 to $500 a month in staking. It's a pretty substantial amount, right? So even if I have like $16,000 in my futures account, like who cares? Because the money I have is liquid. So if I'm going to take that $16,000 and leverage it to $150,000, it doesn't really matter that much because I have lots of USDT in my ledger that's just ready to buy. Do you know what I mean?